Today, we're digging into a very specific market signal. We've got a massive bullish analysis report that's focused entirely on one company, Lithium Americas Corp, or LAC, as you'll see it. And it follows just an explosive day of trading. Our mission today is pretty straightforward. We're going to take this one, very high conviction analysis, break it down, and really try to figure out if this recent surge in the stock is the real deal.
You mean the start of a major turnaround?
Exactly. Or is it just some temporary rally in what's been a pretty brutal downtrend? We're giving you the shortcut to understanding what's driving this thing. So let's set the scene. Why LAC and, why right now?
So the timing is everything.
Yesterday, the stock didn't just tick up a little bit. It absolutely ripped. It closed up 6.86% at $5.76, and the volume was huge. The tape was just screaming.
And that's a great point, because if you look closely at that trading tape, the analysis we're looking at notes something really critical.
Yeah.
The excitement wasn't just during market hours. The buying momentum actually kept going, just slightly, into the after-hours session, pushed the price up to $5.81. And when you see that kind of follow-through, especially on high volume, it suggests this isn't just retail traders jumping on for a quick ride.
Oh, yeah.
It points towards institutional money, the smart money that these reports always talk about. It seems like they're re-engaging with this name after staying away for a long time. It really implies a pretty big shift in market sentiment is brewing.
Which brings us right to the core question this whole analysis is posing, the one we really need to unpack. Is this dramatic surge the signal that the stock is finally turning the corner? Is it making a run back toward those, high double digits we saw before?
Or is it just noise, just a temporary bounce?
Let's start with the price action itself, because the analysis really spends a lot of time on the character of the move. The stock opened at $5.64, and then it just immediately surged to an intraday high of $5.97. It was aggressively testing that $6 mark right out of the gate.
And the crucial part here, I think from a technical viewpoint, is what happened after that initial rip.
Yeah.
The analysis makes a huge deal of this.
Yeah.
It didn't just flash up and then immediately collapse.
It wasn't a pop and drop.
Exactly. Instead, it spent the entire day just kind of consolidating, building a base of support, and then it closed strong. It held on to pretty much every gain it had made. That strong close on high volume it's really the key to the report's whole interpretation.
Okay.
They argue that this kind of action signifies seller exhaustion. Essentially, everyone who wanted to panic sell their shares during this long lithium winter, they've done it. They're gone.
So the conclusion in the analysis is that institutional capital is now the one stepping in. They're actively accumulating shares.
That's the argument.
They believe the risk-reward has fundamentally flipped, and they're positioning themselves now for what the report calls the next leg up.
So we're moving from panic selling to strategic accumulation.
Okay, so that covers the what, the chart, the movement. Now we really need to dig into the why.
The bull thesis.
The bull thesis, exactly. If big money is buying, what's the story they're buying into? This report lays out three very distinct arguments for buying LAC right now.
And the first pillar is the asset itself. And it's all about geology. It's Thacker Pass.
Right.
This isn't just, another lithium project. The report frames it as a strategic national resource. LAC owns the largest known lithium resource in all of North America. And it's right there in Nevada.
And if you connect that to the bigger picture.
Which you have to. The analysis calls LAC the crown jewel for one very simple reason.
Yeah.
There's this intense government-level push to establish secure domestic supply chains for electric vehicles.
We've all seen how critical supply chain security is in the last few years. And the sheer size of this asset, that's crucial too, right? When we talk about how big Thacker Pass is, what are the practical implications for the U.S. supply?
Oh, absolutely.
Is this thing big enough to actually move the needle on a national scale?
The analysis makes that very clear. While, of course, one mine can't satisfy all projected EV demand overnight, Thacker Pass is being positioned as a generational asset. It fundamentally changes the domestic landscape.
Right.
By starting up domestic production on this scale, it directly tackles that strategic vulnerability of relying almost entirely on processing capacity from geopolitical rivals.
Yeah.
This isn't just about profit margins. It's about securing critical materials, sovereignty.
That strategic importance leads perfectly into the second argument, and maybe the most unique one in the whole report.
The de-risking.
The massive de-risking provided by the Department of Energy loan. I mean, any investor who's looked at mining stocks knows the nightmare scenario, right?
Oh, yeah.
The company spends billions, they get so close to production, and then boom, they run out of cash and go bankrupt before they ever deliver a single pound of product.
That capital risk is what keeps these stocks so speculative.
But LAC has this unprecedented counterlever.
A huge one. The $2.26 billion DOE loan. And this is where the analysis really gets interesting. It doesn't just call it a loan.
It calls it a government backstop.
Exactly, a backstop. And this is so different from just getting money from a commercial bank. The due diligence the DOE does for a loan of this size is, I mean, it's incredibly stringent.
They check everything.
Everything. Technical feasibility, environmental impact, project management. The government has basically performed the deepest possible audit on this project and given it their stamp of approval. That injects massive confidence.
Okay, but let me play devil's advocate for a second here.
Go for it.
Even with that huge safety net, the whole thesis still relies on the price of lithium recovering, right? We've been in this lithium winter because prices just fell off a cliff. So if the market doesn't recover soon, how insulated is LAC, even with all that DOE money? Doesn't the drop in the commodity price kind of undermine the whole valuation argument?
That's a sharp question, and it's a necessary one. The analysis tackles this. It argues that the DOE loan isn't just capital. It's a guaranteed path to completion. See, most speculative miners fail because they hit a cash roadblock when commodity prices fall. LAC has $2.26 billion locked in. That ensures the physical asset, the mine, will be built. It will be built regardless of what the price of lithium is doing in the short term.
So the argument is that you're buying an asset that will exist and will produce.
Exactly, not one that might exist. The government, having put this much skin in the game, has a vested strategic interest in seeing this project succeed. It just fundamentally changes the execution risk. It insulates LAC from the worst fears that plague all those other pre-production companies.
That's a key reframing. The certainty of completion is the de-risking factor, not the current spot price. All right, now for that third pillar of the bull case, the valuation gap. The report suggests this is a temporary window for investors. Let's look at the numbers. The stock's 52-week range is, it's wild. It goes from a high of $10.52 all the way down to a low of $2.31.
And sitting where it is now, at $5.76, the stock is still trading at nearly a 50% discount from its yearly high.
So the analysis frames this as a classic contrarian opportunity?
That's exactly the term they use. The market has priced in all the bad news, the commodity slump, high interest rates, all the uncertainty. But it's failing to price in the two massive positives we just talked about.
The irreplaceable asset and the government safety net.
The two biggest factors.
Right.
They see this discount as a market oversight. And their logic is, if you believe even a little bit in the future of EVs, then buying the single most important U.S. asset at this price, fully de-risked by the government.
It's a compelling entry point. Okay, let's ground all this bullishness in the numbers now. We've got the narrative. What about the technical target?
Right.
What are the key price levels investors need to be watching, assuming this momentum continues?
So the analysis confirms the stock is breaking out of a long consolidation period. The price was trading sideways for months, just building pressure.
And now it popped.
But for this breakout to be confirmed, we need to smash through that immediate resistance level.
And that level is?
It's clearly defined at the $6 psychological level. $6. Clearing $6 with conviction, and that means on high volume, closing above it. That's the first major hurdle to overcome.
Okay, so once that psychological barrier at $6 is cleared, where does the analysis say the stock is heading next?
This is where the chart actually starts to look really promising, according to the report. They state that once we clear $6, there's historically very little resistance, very little air until the next major zone.
And that is?
Around $7.50.
So that means if the buying pressure keeps up, the stock could move pretty fast through that gap.
The path of least resistance is up. Exactly. If the momentum holds, the move could be swift. But we also need to know where the floor is. The key support level that absolutely has to hold to maintain this new uptrend is defined at $5.50.
And if it breaks below that?
If the stock were to fall decisively below $5.50, the whole technical thesis starts to unravel. It would signal a failure to hold these recent gains.
Yeah.
It would probably trigger profit taking and suggest we're going back into that long-term downtrend. Holding above $5.50 is, well, it's critical for the credibility of this breakout.
And tying all this charting back to the fundamental story, the analysis gives a near-term forecast, right?
It does.
It suggests a retest of that 7 to 750 range in the coming weeks. What's the catalyst that's supposed to drive it up there?
The report specifically points to continued construction updates from the Thacker Pass site.
Real-world progress.
Tangible progress. As the physical asset takes shape on the ground, and as those deadlines for initial production get closer, that valuation gap we talked about should start to close. Every positive news release on construction acts as a signal that the project is on track, and that should drive the stock towards its potential value.
This has been a really fascinating deep dive. This analysis report, it doesn't really offer a lot of caveats, does it? It frames yesterday's big move, that nearly 7% jump, as a fundamental shift.
A warning shot is the phrase they use.
A warning shot, I like that. The ultimate conclusion here is that the lithium winter is effectively over for LAC. and it considers the current price, below $6, as nothing less than a gift for investors willing to look past the short-term noise.
And the argument is powerful.
Yeah.
It really is. Because it relies on this perfect convergence of two huge factors.
Right.
First, the strategic scale of Thacker Pass, the biggest lithium resource in North America. And second, that unprecedented financial and political security blanket from the $2.26 billion DOE loan. It's that blend of an irreplaceable asset with a unique government backstop that really defines this whole bullish case. So as you digest all the details from this analysis, here's a final, maybe provocative thought to consider. Given that the U.S. government has essentially provided completion insurance for this project, a safety net that removes the single greatest speculative risk from a mining operation, how should that fundamentally change the way you apply conventional risk assessment to stocks like this? Does the strategic, government-backed asset truly move into a class of its own? Something to mull over as you watch the charts.